Good evening and welcome back to Be Rich. Today I want to talk about a deal that is heating up. Walgreens, the owner of Boots and some assorted chains across the world, was putting those pharmaceutical chain for sale. It was very lucrative business and is a very important business in England because this is a recognizable name. The biggest problem in acquisition of Boots is the amount that has to be paid by the acquirer into the pension guarantee fund if there is a shortfall or there is no shortfall. Walgreens are expecting $8.5 billion for this company. It was reported that Mukesh Ambani's Reliance Retail was a very interested player in this. Along with the Apollo Investment Group, it was clear that Mukesh Ambani had put in a bet. Like most of the other high street deals he has done in England in recent times, we thought that Mukesh Ambani would walk away with this deal, especially the way he bought England's biggest toy retailer. However, in this case, he is facing entrenched competition from his fellow Gujarati businessmen. In the late 60s, a family of Gujarati Muslims from Bharuch migrated to England to work in the emerging market of textiles in Blackburn, England. Two brothers, Zubir and Moshin Issa, have now one of the biggest retailers in England, and they seem to be interested in acquiring Boots. They have tied up with TDR Capital. Who are these Issa brothers? These Issa brothers have a company called Euro Garage. What started off as a single garage in Blackburn, England, has now morphed into a major gas and convenience station, owning petrol bunks and convenience stations across Europe, America, and Australia. They have grown by an inorganic route by acquiring companies. They expanded into America by buying a brand called Kroger. In recent times, they have tied up with an investment firm called TDR Capital and acquired Asada, a supermarket chain from Walmart, and they seem to have turned it around. Among the two of the big bits that came into Boots, one was from the Ambanis and Apollo together, and the second came from Issa Brothers Asada along with its original partner TDR Capital. It is said that Issa Brothers' bid was the highest, though it did not come anywhere near what Walgreens was expecting for this chain. Walgreens, in turn, has put time on this deal in the sense that it has extended its deadline by more than a week to see whether he would get a better deal because their asking price was $8.5 billion. The best deal they have got is a net payout of $5 billion. Therefore, they are waiting for time to shop more and make play one bid against the other. If this deal had happened 6 months back, things would have moved faster because credit markets were easy and money was freely available. With the coming recession in the United States and England, the interest rates are tightened and it is not easy for a VC fund to raise money and deploy it in an asset like Boots with very little returns because the future is definitely going to be online. Therefore, Walgreens has postponed and given its bidders more time. But more than anything else, the two bidders have to pony up the money to buy this asset. The Issa brothers have suggested that they will put up some equity with TDR Capital. Primarily, what they will do is sell us some of their supermarket assets and pay off that debt. And the debt would be not on the acquiring company but on the supermarket chain Asada, which they have bought from Walmart. And some non core assets will be sold in the open market so that that money can be used to prepay debt. So it looks like that the bidding war could intensify. But the real matter is, if this deal had gone through 5 6 months back, things would have been far easier because money was freely available and central banks were actively interested in developing credit. But when the way inflation has moved across the globe, especially in America and England, credit markets have tightened, and for somebody to finance this deal has become relatively difficult. It is very difficult to find money today in the market. So that is why the quote has been marginally less than what the parent company wanted. It is quite possible that the parent company may decide that it does not want to sell this asset. But overall, it is very clear that both Ambani and the Issa brothers are both interested in acquiring this asset. Issa brothers are willing to go to the extent of dumping out some of their supermarket business which they have developed over a period of time in favor of this business. What happens in the competition between two Gujaratis is something only time will tell us. Let us just say, let the better man win. Thank you for watching Be Rich. If you like this content, kindly hit the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support to Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.